What's up, traders? If you're new to my channel, I'm Simone G FX, and I do share my trades here on YouTube and on Instagram. And today I just wanted to share some tips that could, help you rather than just share my trades, just to share some trading tips. I know, when you're searching for information, you want something that can really of value that can really help you in your trading journey. All right. And I'm going to be sharing a little bit with you on how I use moving averages. Now, a lot of traders don't like to use indicators. I'm not so much of an indicator trader, but I do find that the moving averages help me, especially as a day trader. All right. Now, I primarily trade the 15-minute chart. Occasionally, I'll go to the 30-minute or the 5-minute chart. And if you're day trading, you really want to be on the right side of the trend. And my filter for that is the moving average. All right. So what I use the 7 EMA along with the 14 EMA. You could see the 7 is the blue moving average, and the 14 is my longer intraday moving average. And then I use the VWAP indicator, VWAP. It's a type of a moving average, and you'll find it quite useful for when you're getting into strong momentum trades. All right. So let me look at, I'm not looking at a strategy right now. I'm just showing you how the moving average can help you with whatever strategy that you're applying to your trading. All right. So I'm just going to look at breaks and retests and how that can help you. First of all, this is what I do. I tell myself that if I'm going to take an entry after I see a setup, I never take that entry against the moving average. What do I mean? All right, let me look at okay, let us say that you're trading supply and demand. I want to just use that. Let's say you're trading supply and demand, right? And this would be an area of demand with a gap that was not filled, right? You can see right here. And we went up here, price pushed up and just slightly broke structure and came back down. Now, if you're entering aggressive, you would have been swiped right here. All right. Whether or not you do, this is what I never do. If you hit buy, if you hit the buy button right here, remember that the moving averages here are going to stand as resistance against that trade. I never ever do that. All right. So this is tip number one. Never take an entry against the moving average, right? Any of them, all of them serve some purpose to me. So for example, I see the 7 moving average as a small term, like a short-term trend, right? Then the 14 moving average as a longer-term trend. And then the major change will take place when price is above all three. That is the 7, the 14, and the VWAP. So I know that I'm in a stronger and a longer-term trend. Okay, so when do I take trades now that will favor me according to the moving average direction? Let's look at this. All right. I'm just going to use supply and demand. I'm not getting into a strategy right now. I'm just going to use supply and demand, and I'm going to look at an example with break and retest. All right. So this is a, you could say, a low probability area of demand. Now, I would take this trade aggressively right on this candle. Why would I do that? Let me explain now. Now, what we'll observe is that this candle, it broke above this bar right here, which creating an area of demand. This is a 50-minute chart now, creating an area of demand for me. So what I'm looking at now is the fact that not just that we've created an area of demand with a gap at the, well, not really with a gap, it's low probability, right? An area of demand at this point has been created. But what's significant to me now is that the price, as you can see, has closed within the moving average. Can you see that? This is telling me that there's a potential shift in the trend. All right. So what I'd be waiting for now is for the price to pull back into that area of demand. And this is how I trade, guys. I most of my entries are aggressive unless there's something else that I need to confirm. Let's see how I'd enter this trade. So what I anticipate now is that the price should pull back and tap in on this area of demand and give me a long entry, right? All right. How would I actually place my entry on this trade? Now, when this candle pushes down into the zone, what you'll realize is that let me delete this so you can see it. What you'll realize is now that price, this would be a red candle, and price would be hovering below the moving averages at this point. At this point, this wick would have been a red candle. Price hovering now below the moving averages. Would I take my entry there? Absolutely not. What I would do after price has tapped in is wait for either a candle close or for the price to push back above the moving average after tapping back in, and then that would be my area of entry, right? I like to put my stops below the zone. I don't like that below the candle business. All right. I realize that my win rate is much higher when I do that. I am not so keen on tight stops. I'm more keen on higher win probability, higher success rate. All right. So can you see that? All right, let me give you another example. All right, let me give you another example. Moving all these drawings. Right. So let us take a break and retest trade over here. All right, price, created structure, broke, all of that over there, broke through structure, right? And it's coming back into retest. You also have an area of supply over there. Let me just differentiate the two. So whatever you trade, you will see that it applies just the same. All right. So now what we have is a break of structure, and we also have, so this could be a break and retest trade, and we also have an area of supply, high probability supply, and now we have confluence in the setup if you trade those things. Now, I am not going to enter aggressively here. No. Neither am I going to enter on the break of candle here. Absolutely not. Because now, for me, when I enter here or on the break of candle, the moving average is going to stand now as support against my trade. And that means that it now means that price could tap the moving average and bounce up to stop me out. If you keep your stops low, you're gonna be stopped out. Most times in this kind of a scenario, or it could push, closer, to this high. Whatever the case is, I am not taking that entry just because now on that entry or the break of candle entry, price will be trading down into support. We never sell down into support. All right. So what I would be waiting for is a change in trend now to confirm my entry. What do I mean? I'm waiting for the price to close below the moving average. Now, this is my confirmation candle. All right. So it has done all of that rejecting, all of that breaking of candle, but now you've confirmed to me that, hey, you probably want to go down. All right. And then, so this would be my entry candle right here. And then now I'm more confident keeping my stop a few pips, maybe 2 pips above this high, and more confidently above here. But this would be okay with all that rejection. I would take that chance, right? And this would just be a wonderful trade. Wonderful, great, great, great trade. Great trade. And it went on to do so much more, so much more. I hope you guys are seeing what I'm saying right there. Can you see that? That was a beautiful 1 to 2 point something, 2.5, whatever trade. All right. But when you use the moving averages, they are going to help you keep those entries within the moving average. I'm going to give you another example. I'm just going through. I'm not, I'm not cherry picking anything. I'm just, whatever I see, that's what I'm going to find and show you. let me show you another trade that I would not take. And this will help you now. It doesn't mean that you'll avoid, your objective is not to avoid losses. It's just to act on the opportunities while protecting your capital, okay? So I want to show you this, right? So now we've got a perfect break of structure here. If you trade break and retest, you know what I'm talking about right here. All right, so we've got a perfect break of structure right there. Price swinging down. We're doing lower highs, lower lows. We broke this low, close below the low, so we're coming back into retest right there. But we also have an area of supply over here. All right. My problem with this area of supply is that because now what I do when I trade is use areas of confluence, right? So I'm not just looking at the break of structure. I'm looking at, and this, you could say this is a minor structure here that was broken, right? If you go on a flip to a lower time frame, you'll see that it was actually an area of structure. All right, so like a swing low. So what I would not do is sell aggressively here, because now if you do that and you enter aggressive, let me show you now. The trouble is you're going to be trading into the support of the moving averages. That now means that, let me zoom it up so you can see. That now means if you sell here, price could tap into the moving average as it has done right here and use the moving average as support to go higher. I don't take those trades. My entry is against me. Already, I'm selling into support. That's crazy. So that trade would have been off my radar completely. And what I would have been focused on now is this trade right here, where now price pushed above, creating an engulfing, which also engulfing setups also create areas of demand, okay? So now I would have seen this as an area of demand and a high probability before price came back and tapped back in. Let me just, I'm trying to change this so just to make sure you're seeing what I'm saying. And I hope you guys are getting some kind of a value from this, all right? So now what we would have had is price breaking above and preparing now to tap back in, and we are anticipating that the price is going to go upward. All right. Now, entry. We're talking now about identifying what's a great setup and identifying where it's best to place an entry on the trade. All right. So let's look at it now. Right. When the price begins to tap back into the zone, is price still within the moving averages? At this point, this is where the price tap back. I want to show you, right? When I do go aggressive and when I wait. Oh, so when price actually tapped the high right here, guess what? Price was still inside of the moving averages. That means this would have been an aggressive entry for me, which stops just below there, targeting maybe these highs over here or even higher to these highs up here. Right? And look at that. Just because we have no agreement with the moving averages, agreement with the trend, not so much the moving average, because I'm trusting the moving average as my my trend indicator. All right. So because we now have agreement, I have a more confident setup. I am more confident in the setup. And guess what? My probability increases. I want to just encourage you to kind of shift away from these kind of sniper type mentality. It, you know, for me, the sniper is more of an accurate approach rather than an early approach, you know, and you'll find that you will get much better results just taking this approach of using the moving average to govern your entries, to filter those trades that are going to be your higher probability setups or your lower probability setups. I'm going to do one more trade example. Now I'm using a different strategy. I'm just going to be trading a break of structure, straight break of structure, right? So we can see price pushing up there. I didn't even see this, guys. I'm just going through the chart, just random, right? And we can see price broke structure over there, right? higher highs, higher lows, all of that. Price broke structure. We can see definitely. All right. Price broke structure. Now, what we're seeing now, what we're expecting now is that the price will tap back in to push higher. All right. Great. Now, where do we enter? This is me. And I'm not afraid of drawdown on my trades. I am not afraid of drawdown on my trades. Stop being so afraid. Apply the proper risk and allow the trade to run. That's my philosophy. Okay, so we have a break of structure. I approach these in terms of setting my stops in two ways. So I'm going to deal with the entry first. So where do I enter? Now we've got a break of structure over here. And if you're aggressive, you know, when price taps back in, your entry would be here or a little bit, you know, lower down here, whichever, right? Now, let me show you now. So this is a great place to enter. All of these up to these candles here. Let me show you. And I hope you're getting some value. Up to these candles here would have presented great entry opportunities because now we're entering right on the support of the MA. Now understand, we've broken resistance, turned into support, and we also have confluenced this with the support of the moving averages. What do we have now? A solid trade setup, guys. So when you go long on this trade, with stops just below structure, the previous low, or you could use these wicks over here because those represent significant lows. You could use those to guide you in setting your stops. And look at this trade. Just because you had all of that confluence now with the moving averages, along with your trade setup for entry, it gives you a stronger trade, a much stronger and higher probability trade. So I just want to encourage you, you know, whether you trade the 5-minute chart, the 15-minute chart, as a day trader, add your moving averages and see if it makes a difference for you. Do not trade against the moving averages. When you're placing your entries, whatever the setup is, try to trade within the direction of the moving averages, and it will make a significant difference in your trading. If you like this video, if you find that it has helped you, please like, share, comment. Let me have your feedback. Do some back testing and come back and tell me how it went for you. All right. So hope you have a great week of trading. And until next time, this is Simone GFX. Peace out.